Hi, this is Rachel Gold from Ingenuity Marketing Group, and I just want to welcome you to today's webinar with Sykes & Company PA, Bookkeeping versus Accounting, What's the Difference? We're going to give about 1 more minute for people to log in, and then Ollin Sykes will begin the webinar.
And while we're waiting for everyone to come on board, this is Ollin Sykes. We appreciate you being with us today. Both Scott and myself will be handling the discussion of the PowerPoint slides. We certainly want to be in a position to answer questions at the end. And again, we appreciate the opportunity for you to be with us today. Just so you'll understand, our firm provides cloud-based virtual accounting solutions all over the country to pharmacies only, tax mitigation, tax compliance, etc. We are involved in a tremendous amount of accounting through the cloud aspects for the hundreds of pharmacies we deal with. And with that said, Scotty, I'm going to hand it over to you.
All right. Sounds good. So today we're going to be talking about bookkeeping versus accounting and what's the difference. And we're also going to go over pretty much the 4-step process of accounting, how I like to describe it. So first of all, what is bookkeeping? What is it? It is the recording of financial transactions. It's pretty much the day-to-day process in the back office, so to speak. It's posting debits and credits. It's producing invoices. It's paying invoices. It's maintaining the balance sheet, general ledgers, historical counts, completing payroll. So it's just a pretty much management process in that back office from a day-to-day standpoint. One thing bookkeeping is not, it's not accounting, which we will show here in the next couple slides. It is not actual accounting, it's bookkeeping. So again, it's that day-to-day process, recording the payables, paying bills, making invoices, and just handling the bank reconciliations or what have you. It is transactional in nature, so it's handling the transactions that are taking place again in the day-to-day work in the back office. I like to see it as part 1 of the 4 steps in the accounting progression, and we'll get into that further. But this part is fundamental. It is a key. It is an important part, no doubt about it. So you do want to make sure that you do have solid bookkeeping in place, because the integrity starts with solid bookkeeping. Once you get in the integrity and the numbers in that bookkeeping process, it's really what you do with that from that point is really where the accounting piece comes in and enhances that process. The value added is limited to a certain degree until you can take that information and actually do something with it. Because with bookkeeping, we're not taking the information and taking it any further. It's just recording transactions and debits, credits, etc.
And Scotty, let me just add in here, what Scotty is alluding to is that in a pharmacy operation, obviously you may have a point of sale register, you probably maybe write some checks, you may have payroll transactions, you make deposits. The basics of making the deposits and recording those, the basics of recording any checks that are being written, just the basic aspects of what would take place in that pharmacy operation would certainly be part and parcel to that bookkeeping process.
That's correct. So what is accounting? How is it different? Accounting is taking the bookkeeping and making adjustments to the books. It's preparing adjusting entries. It's actually compiling company financial information or statements. It's preparing work papers for those statements. It's analyzing costs. It's taking it a step further, and you're analyzing what actually took place. It's understanding the impact of, it helps you understand the impact of financial decisions. And it is a high-level process, particularly in pharmacy. Pharmacy accounting is difficult. It's not easy. So it is a high-level process, and it's subjective in nature.
And as far as, go back just a second, Scotty. The preparing and adjusting entries in a pharmacy situation in the accounting process course, once bank deposits are made, you've got adjustments for bank deposits, whether it be bank service charges, bad checks. You may have some reversals. You may have some charges that are coming from debit memos that come through the bank. That would be an example of a type of adjusting entry that someone might be making through their bank account. For receivables, you may have in-store charges. You obviously probably have third-party adjudicated claims that are outstanding at any point in time. Obviously, the PBM payments that are coming in either electronically or through bank or through checks are entered in as deposits, but need to be adjusted at month end to the third-party reconciliation system so that your third-party reconciliations balances for those outstanding adjudicated claims are as accurate as possible through that reconciliation system that you probably are using in your pharmacy. Another type of adjustment that you would have would be perhaps for accounts payable, entering the accounts payable in at month end and making sure that ties in. Adjusting note balances to actual for payments that are being made for both principal and interest that's being paid. Perhaps adding depreciation or amortization if you bought script files or have goodwill amortization that's occurring in that process. So all these adjusting journal entries are part and parcel to the accounting process to moving towards preparing these financial statements so that these costs can be analyzed and compared vis-a-vis your peers and impacting those financial decisions that are obviously being made on a high-level process.
Right, and again, the adjusting entries can be quite complex. For example, as Ollin was referring to, the third-party adjustments for receivables can be very difficult. Determining what that receivable balance is, we want to make sure you've got some kind of receivable process or a system in place to help capture that. But when there's nothing there, it can get very difficult for someone who's not really understands what's taking place. Furthermore, inventory adjustments for inventory at the end of each month are critical. A critical component of the balance sheet and the profit and loss. So making sure you have an accurate inventory each and every month on your balance sheet and your financial statements is very important. But again, those are accounting adjusting entries that is a high-level process, and it's difficult. So making sure the systems are in place to capture that will help in that accounting process. Again, it's a subjective process, more of a subjective process with these adjusting entries, and also with analyzing the costs and analyzing the numbers, etc. And it provides a macro view of the ledger. So we take the day-to-day processes and kind of blow it up to the end of the month or a year-to-date financial statement. So you get kind of a bigger picture of what's taking place. It allows us also to bring in some key financial indicators and also determine, hey, payroll's out of line compared to what we typically see in a pharmacy, for example. So it allows you to identify that. It again, having good solid accounting in place allows you to be aware of what's taking place in the pharmacy to better manage and understand that pharmacy and what you're doing well or what you need to be working on. So it allows you kind of to take control of the pharmacy from that standpoint, and then make adjustments to help manage and grow and take better care of your patients.
Also, let me just kick in a couple things here. With respect to some of these key financial indicators in the accounting process, what we're describing here is an accrual process. Accrual. Some of you may be reporting your financial statements via QuickBooks or whatever system that you're using on a cash basis. To make a very long story short, in most cases, pharmacies need to be keeping their books on accrual basis to accurately report what revenue is being reported as you adjudicate that claim, because the revenue is recorded and earned at the time that you adjudicate it, not necessarily when you collect it. It needs to be adjusted, obviously, for any adjustments, DR fees, adjudication costs, clawbacks, whatever the case may be, and that's what's done on a once-a-month basis through your third-party reconciliation system. But the numbers that we're able to pick out of the full accrual statements here that we're describing, especially as they relate to these key financial indicators, probably there's two key items here we keep our eyes on in a pharmacy. Number one is your gross margin, and as Scotty has mentioned, if we're not making a monthly inventory adjustment, and hopefully you have a perpetual inventory system internally. If you don't, we would highly recommend that you consider that. If you don't have a perpetual inventory system, then you probably need to take a look at getting two accounts at least twice a year to make sure you get two good data points to determine what those gross margins are. Then you can compare those against your peers and against the NCPA Cardinal report. But that is probably the most key number on your statement. And it indicates potentially how well you buy, and how well you buy, which is in turn what your gross margin is the single most important thing on a financial statement for a pharmacy. And if these statements are not adjusted, as we've discussed here for the last 10 minutes or so with respect to the receivables, the inventory, and the payables, there's no way these key financial indicators are going to be accurate in any stretch of the imagination. Once that's in place, the second most important aspect of these key financial indicators in the accounting process is what your gross payroll is as a percentage of your gross accrued revenue. That's what your percentage of your gross, what the percentages of your payroll to gross accrued revenue. The NCPA norm there is about 10.5%, and that would relate to gross salaries only, not payroll taxes, which is typically 0.9 of 1%, not health benefits, not 401ks, not other benefits perhaps you're giving to your employees. I would tell you our high-performing pharmacies are trending in single digit for that, under 10%. But these are just two indications of some key financial indicators that properly recorded, properly accounted for, can tell you where you are vis-a-vis your peers and be able to generally give you an indication of the direction that you're heading and what management changes or options that you have if properly looked at. And of course, that ties right into the tax planning and mitigation process, which literally is a year-round process. It's not just a December process. It's a year-round process to determine way in advance what your options are, so that you know what you can do to mitigate that process and plan in advance for your cash that may be needed in the spring come April 15th, assuming you're an S corporation or a pass-through entity.
That's right. And so the more integrity, the more the better the foundation here in the accounting process, the more industry insight you have, the more advisory you have in this accounting process. Obviously, the better off you're going to be in the long term. But the accounting is so important, and it is a difficult process for accounting for pharmacies. It's not like a typical retail store. It is difficult. So having a good accounting system and a good CPA who understands the pharmacy accounting is very important. Okay, moving on here. So here's the four-step process, the accounting process. We're going to kind of start with the bookkeeping and see exactly, kind of dig down further into the bookkeeping process. So the first stage is obviously the bookkeeping stage, which we've been talking about, and that's your daily sales receipts, your bank reconciliations, your credit card reconciliations, checks, disbursements, deposits. So it's the transactional process of capturing all this information and completing payroll. Again, it's a daily process. There's low time commitment, especially with technologies available today. Technology is taking a larger role in this process and pretty much taking the place of humans in this process, and it ultimately will in time a lot sooner than a lot of us probably expect. It's highly automated. It provides real-time accounting data or bookkeeping data. The value is somewhat low. You get strong value from integrity in the numbers and having that system in place, but once beyond that is, unless you take it a step further with the actual accounting entries and analysis, the value is somewhat low. Part two is the accounting, the adjusting and financial statement preparation. So like Ollin was mentioning, the types of adjusting entries for prepaid assets, maybe of course inventory, which is so important, receivables are so important. You have to understand that what those adjustments are at the end of each month, why you're making them, how they impact the numbers, where you're getting the adjustments from. So inventory and receivables are extremely important, and there needs to be some kind of knowledge there on what you're doing. You also need to make sure you're accruing liabilities, making sure accounts payable are being booked each month. There might be some equity adjustments that need to be made on a yearly basis, and of course you're going to have maybe some tax adjustments for whether that's depreciation or other more complex tax adjustments that apply to your pharmacy. The preparation of the financial statements is also a part of this process. Again, as Ollin mentioned, accrual or cash basis. Generally, pharmacies are supposed to report on the accrual basis, meaning you capture the revenue at the time of when you fill the script, and you're capturing the expense when the process is incurred, not when you pay the expense. Whereas on cash, you capture the revenue when the cash is received, and you capture the expense when the expense is paid. With pharmacies, the IRS requires accrual basis for most pharmacies. There are some exceptions. But generally, if you're on this call, you are probably on the accrual basis. So you need to be aware of that. You need to make sure your accounting is reporting on the accrual basis. You need to make sure your tax returns are reporting on accrual basis. This is a common error we do see when we review tax returns from maybe new clients that walk in our door and seek our advice on things. So that's a common error we do see. It should be a timely process. When you have that fundamental bookkeeping in place, this process should be timely. It should be valuable in that respect, so you have timely information to process and digest and hopefully utilize for better managing your pharmacy. Again, as we've mentioned, this part is extremely complex for the pharmacy industry, as mentioned before, with the inventory, the receivables, the payables, the accrual basis. So it can be complex. It is subjective in nature, whereas the bookkeeping is more of a transactional process. And the value is high here because we're taking the fundamental bookkeeping data and then adding value to it in many ways with the adjusting entries, with the financial statements, and with the analysis of what those financial statements are telling us.
And Scotty, while you're flipping the slides, just to let folks know, if you have any questions, you can come over there and enter those questions in. We'll certainly try to answer these during the time or at least at the end. So feel free to do that.
Okay. Part 3 in the process, the accounting process, we'll deal with the virtual CFO role. What this role is, it's kind of expanding upon the previous Part 2 stage, which is the accounting stage, but it's really taking those accounting adjustments, taking that information, financial information through the financial statements, and really doing a full-on CFO type role with the pharmacy. That includes doing video conference calls, actually going through the balance sheet, going through the P&L statement, picking apart each account, reviewing each account, so to speak, reviewing the ratios, reviewing the trends, and so it's really adding value there, where we're actually going in and talking about the industry, talking about, hey, why are revenues down or why are revenues up? What are you doing different? You know, are you doing MedSync? Are you expanding to compounding, or maybe margins are up? So it allows, having this accounting in place allows us to ask questions that actually add a lot of value and kind of can spark some discussion on what's going on in the pharmacy, what's different, what are you doing different than, say, if your margins are up, 3 or 4% higher than the national average, what do you do different that we're not seeing at, across the board? So it just sparks conversation. And of course, when there are issues, we're quickly able to identify those issues because, we know what the norm should be specifically. So it provides that analysis, advisory, key metrics. Again, we're going over key metrics. It allows peer-to-peer comparisons, and of course that industry insight, because when you're dealing with someone who's working with pharmacy a lot, they obviously know the industry, they know the script systems, they know the robots, they know the wholesalers, so they're able to add that industry insight to the analysis of the financial information that we are getting from the bookkeeping and the actual accounting adjusting stage. again, it's allowing the pharmacy owner to be proactive. It's allowing the CPA to come in and be proactive with the management, whether that's tax planning or whether that's just identifying issues or maybe even opportunities that are available. And this process is extremely high value added because it's asking those questions, it's reviewing that information, it's sparking discussions that are leading the pharmacy owner to either make changes or continue to do what they're doing, etc. So there's a lot of value added here, and this is all as a result of that bookkeeping and accounting adjusting stage.
And just to add to that, Scotty, some of the real world situations we see here is once those numbers are in place, once they're tied in, once the adjustments are there, and in essence, we have numbers that have integrity. We can then begin the planning process to make sure that the pharmacy owner understands what their options are with respect to mitigating the income perhaps they have, look into like asking questions about what kind of technology changes that you're looking at for the current year, what kind of fixed asset purchases may you be planning on doing the next 4, 5, 6 months. Does your retirement plan need to be altered, changed, or amended? We see a lot of retirement plans in this process that are just in a stuck mode, if you will, where it may be a 401k, a safe harbor, it may be a simple 401k, it may be maybe just be an IRA, but there are all types of options depending on the level of income that a pharmacy has, the strength of the balance sheet of the pharmacist, the age of the pharmacists themselves, to take this whole process to a whole other level. But if you don't know where you stand, then you can't work off those numbers and for it to be accurate. Also, there are a number of folks in this industry, particularly in the independent retail pharmacy industry, that are very much involved in a number of eligible tax shelters that allow additional write-offs to occur. It allows you to be very specific about things such as domestic production activity deduction for the compounders or for those that potentially have packaging machines or equipment that qualify under a new tax court decision that was recently made. But again, you can't plan if you don't know where you stand. And depositing money in your bank account, writing checks out of QuickBooks and thinking you have an accounting system is not what it's about. So by taking those fundamental processes and making the adjustments, having accurate inventory, adjusting the receivables, adjusting the liabilities, and making sure that all the liabilities have been accrued, then you have then you have financials that can take you to a whole other level and help you with where it is that you're moving in your life and in your tax mode that you're looking at. So it is a very high value process by being able to be at this particular level. And there's a lot of pharmacies that are at this level and taking it to that next level. In fact, the top 20, 25% of the pharmacies we're dealing with are probably at this level and taking it to another level. It allows them to grow, allows them to expand, allows them to borrow monies easily from the pharmacy niche banks because the banks understand the numbers that they have. They themselves understand what they need to do to increase their margins, or if they're in the data mining aspect, a lot of folks are doing data mining in today's environment. They're able to monitor and maintain that with other products that are out there. But these are the kinds of things that are very high value.
Yeah, absolutely. Again, this part of the process is limited unless you have that strong bookkeeping fundamental process in place, unless you have that good solid accounting knowledge and know how to make adjustments. This part is pretty much, you're limited here unless you have those other two parts to the puzzle here. So that is very key. Moving on, so the accounting and then the tax process. So now that we've kind of got the accounting in place, the advisory is moving forward, we're doing tax planning now because we have good solid information. The tax compliance stage, which is kind of the last piece of the puzzle here, just kind of fits right in. So as we're keeping the books on a day-to-day basis, we're able to, or someone, whoever's in charge here, should be able to come in and quickly do some tax compliance, file the tax return on a timely basis, and move forward with the new year. Regulatory tax compliance may include 1099s. You need to be making sure you're doing 1099s on a yearly basis. we advise all our clients to get W-9 forms from vendors before they pay those vendors. The W-9 form is an information form that'll tell the pharmacy, hey, whether it'll tell the pharmacy whether they should ultimately send a 1099 or not to the vendor. 1099s are required, and the penalties for non-compliance can be quite steep. But this process should be automatic in the tax compliant process. Property tax also should be is part of this process as well. Of course, corporate tax, partnership tax, or individual tax, or all the above are also part of this process. Again, as the accounting is in place, the fundamental accounting is in place, this part should be fairly streamlined and timely at the end of the year. And with that,
okay, we got some questions here. Let me kind of throw on the table. The first question is, how does this process differ for startup pharmacies versus established mature pharmacies, especially as one is trying to control expense in the startup processes and balance value-added services? That's an excellent question.
Yep.
It probably, we work with a tremendous amount of transitioning pharmacies in the industry, and I will tell you that the pharmacy niche.
I think I lost.
Yes, I can hear you, Scotty, but I can't hear Ollin.
Yep, he got off. That is I'll just take over from here. That's a great question. The accounting process is really the same. One thing we've noticed with maybe existing stores versus startup. With a startup, you don't need to have a human in that back office bookkeeping role. Automated accounting has kind of taken over that process, using technologies, hosting the accounting file, using a bill.com or so for the bill paying process, outsourcing the payroll, and all those items sync into the system, and then dashboards that can download items and stuff. So the bookkeeping process, what's really a big difference there is the automating that, as in some more established pharmacies may have their mother or the mom or someone or whoever, a family member, handle that back office process. So that can be different. But other than that, these same processes are the same and should be the same in the entire workflow.
Okay. Can you hear me now?
Yes.
Okay. Another question is, what is the standard gross margin in pharmacy, and what about specialty pharmacy? The standard gross margin in pharmacy is probably going to be around 23% net of rebates. Long-term care pharmacies probably 3 to 5 percentage points higher. Obviously, if you're doing DME, if you have a 340B program, you may have some different margins than that. In specialty situations, we'll see sometimes mid-single digit to low double digits in specialty. Specialty is an animal by itself with obviously high prices, high growth, and a lot of working capital needs with respect to that. It's a very special type of situation that you've got to make sure that you really have your books and records together. The question is, again, will this be recorded and available for viewing again? We'll actually post this on our website. Rachel, I think we probably will have it available to push out to anybody who would like. You might want to speak to that. That was another question that we got.
Yep, we'll definitely have it up on the website and available to watch. And then, Ollin, I see that we also got asked, will the slides be available? Do you want to make them available on the site with the webinar, or do you want people to email you to get a copy sent to them?
If they can email us at the email address shown here on this slide that's showing on the screen currently, we'd be happy to accommodate that.
Yep.
And
we should be, just to let people know, in terms of the recording, generally we get it up within a few days, and then send an email out to the list of everyone who signed up so that people can watch it again, or if people missed it, they can come out and view it. So give us a couple days and then watch your email for a link to the recording.
Okay, I'm just trying to see if there's any other questions. Rachel, I don't see any additional questions. So with that,
I have a couple,
okay,
Ollin, if
right.
you want to answer my questions.
Sure.
I was just curious, since we've done a lot of videos together, what's the experience of the pharmacist in terms of ease and freedom between having a bookkeeper versus having the kind of accountant you've described here?
I missed the first part of that question. I'm sorry.
What's the experience of like in terms of the pharmacist's own ease and freedom? What's the difference between having a bookkeeper and versus an accountant?
Well, that's a really good question. In today's environment, you really don't need a bookkeeper in the pharmacy. In fact, it's an expense. In many pharmacies, a typical $4 million pharmacy, and a lot of people may argue with this, but a typical $4 million pharmacy has both an internal and an external cost of probably anywhere from $35,000 to $55,000 a year. Especially if they have a bookkeeper internally, they may pay $30,000, $35,000 to, plus payroll taxes, plus 401k, plus health insurance, plus an outside CPA who probably works with them either quarterly or annually. So in this kind of world we're talking about today, in an optimal world, all this can be mechanized through the cloud. About 10 minutes a day is all that someone is needed to scan certain documents into the system. A lot of the processes can be set up automatically, yet the pharmacy owner can be in full control of what he pays and when, or what he or she pays and when, and what payroll is paid and when, because the payroll typically is outsourced as well. So the environment of today is not like the environment of the past, and it's an expense that you just typically don't need anymore. And unfortunately, a lot of pharmacies have that built into their system, and that cost is no longer needed.
Yep.
In a perfect world.
And I'll just add, the systems we use here internally are all designed to pretty much free up the back office of the pharmacy and really provide the pharmacists more time to grow the pharmacy and take better care of their patients, whereas at the same time they're receiving better information, more timely information, and proactive information. So having these systems in place allows that to happen, whereas in the past, if you're handwriting this or doing payroll in-house or whatever it may be and not using technologies and not using up-to-date systems, you are limited, and it's going to take some time away from actually, maybe taking care of those patients like you should, maybe stepping out and consulting with them, whereas instead of running to the back office to sign a dozen checks. Again, these processes are transparent, and the pharmacist has full control as much as they want over the processes. Some choose to really not have much control, and some want to see every bit of it. So it just depends on the nature of the pharmacist, but there is flexibility there.
And Hamid has a question. I'd like to know how you interface with our accounting system. Essentially, assuming you're using the QuickBooks system, that can either be put into QuickBooks Online or hosted in an environment. We use the rightnetworks.com environment, rightnetworks.com, and or the QBO environment, QuickBooks Online. So we can essentially take your accounting files and information, port it over there, make whatever adjustments are necessary in the conversion, and then you have access to the data and information 24/7, as Scotty just mentioned. So it interfaces very easily and very simply into the process. To answer that question, then I'm seeing another question come through in specialty. What is benchmark for payroll as a percentage of the revenue? It really is going to depend on the level of revenue. We have specialty pharmacies that might do 10 or 15 million. We've got them that do 50 to upwards of 100+ million. So it really depends on that level of revenue that's being filled or generated. And a lot of times those specialty pharmacies will concentrate on a relatively few number of items or deal with orphan drugs or whatever the case may be. So I don't know that there's a particular gross payroll percentage just for specialty only that I have seen published anywhere. To answer that question, and here's another question that's coming through. So would you offer the whole bookkeeping as well as the accounting? Absolutely. The bookkeeping ties into the accounting, ties into essentially the virtual CFO services, ties into the tax planning mitigation and to the tax compliance part. So it all ties together into one. You can't just have bookkeeping and think you've got a system. That's only part of it. And it's a very small part of it, typically, as we tried to describe in this process. Here's another question. Could you mention again what the payroll should be as a percentage for the standard pharmacy? Yes. We would like to see, optimally, we'd like to see under 10% of total accrued revenue. That's with revenue adjusted for the adjudicated claims that are outstanding. The NCPA norm is around that 10.5% to 11% range. That would be for the WQ amounts only, not, again, payroll taxes, which is typically 0.9. That's 0.9 of 1%. For payroll taxes, then you've got health insurance and other costs that are associated with that. but the actual payroll typically is in the 10.5% range that we would see. So if your number is far out of that range, and if you're far out of the range from 23% gross margin, that's a large part of what you can do to probably control your profitability on the bottom line. It probably needs to be very seriously looked into. Rachel, did you have another question?
I did. I wanted to ask, if I'm a pharmacy owner and I'm working with a local CPA, you know, you kind of went through the 4 points, you know, where bookkeeping is the first and 3 of accounting, and you provide all 4 of them. But if I'm working with a local CPA, am I getting all of those 4 parts of the accounting process?
Well, it depends on the experience level of the person that you're working with. If the CPA that you're working with has probably 1 or 2 clients for pharmacies, they may not understand what MAC pricing is. They may think that's something they get down at McDonald's. They may think PBM is a peanut butter and mayonnaise sandwich. They may or may not understand some of the issues that we've talked about here in this conversation. They may be not keeping your accounting on an accrual basis. So it's very difficult to know what level of experience the professional is that you work with. But again, because this is retail, but it's a specialty area within pharmacy, is a specialty area within retail accounting. It's a whole different animal with its own set of logo, own set of operations, own set of checks and balances and controls. And unfortunately, you're a pharmacist. You work behind the bench. We don't think you need to be the one involved in that accounting process. Unfortunately, we know a lot of pharmacists who try to handle that themselves, and they end up working all kinds of hours and not really knowing where they are, and getting very frustrated in that process. So, I think you just have to find out go to the trade shows, talk with people in your industry, and find out who they know in the industry that can help you.
I'll just say that if you're not sure, then no, you're not getting that level. If you're getting this level of the accounting system that we've discussed here, then you would know without a doubt. So if you're asking the question, my hunch is no, you're not getting that. But this system we have, this system we have generated with pharmacies, we've put a lot of time and effort, and this is a lot of experience that we have had building this kind of system for pharmacies. So.
And I might add, this is something we've been doing this for some 40 years. We have hundreds of pharmacies to deal with. Again, this is all we do is we're some 40 people. So, you know, having the experience and dealing with all these kinds of issues, again, whether it's DME, specialty, 340B, long-term care, hospice, closed-door hospice, or independent retail pharmacies with no drive-up window, those that have drive-up windows or multiple drive-up windows, we've pretty much seen it all in the industry, down to having operations that have 600 square feet to do $6 million in retail, up to 10,000+ square feet of pharmacies. So we kind of seen it all over the country. We work all over the country. We got clients, I think, in 42 states and a multiplicity of time zones. But if we can help you in any way, don't hesitate to reach out to us again at our website. And again, we probably haven't mentioned on our website, we have hundreds of videos that we've published that we update about every 10 days that are available to you, that are free to you. Typically, they're 3 to 8 minutes in length on all kinds of industry-specific topics. I would suggest you might want to take a look at a lot of that information. We've got a fair amount of collateral materials that we have out there, and articles that have been published in NCPA Pharmacists and other magazines that are being published in today. And again, we appreciate, if I don't see any more questions, and Rachel, you don't have any more, we appreciate your, okay.
I want to remind people we do these webinars roughly quarterly. So if you like this webinar, please keep an eye out for the next one. You already mentioned the videos. There's a lot of great resources on the Sykes website. You can sign up, get on the mailing list. And Jeff, you already kind of said it, Ollin, but Ollin and Scotty are really easy to talk to and really easy to get a hold of. So if you have other questions today, I really encourage you to just shoot an email off to them.
Yeah, and these numbers on the screen are our direct numbers to our desk. So if you want to talk to us, just give us a call.
All right, well, thank you so much, Ollin and Scotty, for all the info today. This has been a great webinar.
Thank you.
Our pleasure. Hope everybody has a great day.
Yep.
Thanks a lot. Bye-bye.
Bye-bye.
Bye-bye. Take care.